So between men and women, in the olden days, I used to think women were better. But now, 50-50. Both of them are equally likely to default. So it's not a matter of whether your gender, it's not a matter of your tribe, it's a matter of your character and your ability to pay. It's like going to see your doctor. You don't want anybody to know what your state of affairs is. If you borrow in a bank, you stay an information somewhere that has your name there. So sometimes people are worried about their information just all out there in the display like that. So with us, you borrow privately, you pay privately. You can borrow privately, only one person or two people know what you need the money for, and then to be paid back privately. Just the same way you want to go to a doctor. You don't want to go to a doctor that and the person that has your file downstairs is shouting on loudspeaker to another person that she's here for cancer treatment. So initially, when we started, we weren't registered with a credit bureau, and if we were, all the people that we gave loans to then that went bad would not have done it. Even if it's just a tiny amount that you defaulted on, nobody will touch you, and it helps. Lending institutions too, because somebody that you think that has run away, the person will one day become a millionaire and then will want to go and get a loan with First Bank. First Bank will just say, go to your lender, go and settle your loan with them. So by the time they go to 4 or 5 institutions and everybody tells them to come back to us, they'll usually come and clear. I don't understand the purpose of lending. And then while meditating on it one day, you are actually serving a purpose. You are helping people with their needs. So it's not as if you are just there for business of making money. Somebody is in a need. You're standing there in gap for the person till the person is able to repay. So are you entering the lending space just to make money? Because you'll be disappointed because one bad loan can wipe away 10 months of 10 months of interest. But if you are there for the right purpose, you will not be moved. And then you have to check yourself. You need to be somebody that is honest and transparent. If you are not honest and transparent, you won't get investors.
Okay, hello guys. It's another series today with Bumi Smith, and I have a very special guest. All my guests are special, you say yes, but I think she's special to me because we went to school together. But she's an entrepreneur. She's vast in the knowledge of finance. She's an ex-banker turned micro lender, and she's going to tell us all about starting a business in the micro lending space. She's going to give us an idea of what is needed, if it is capital intensive or not. But I'm assuming that you can start from where you are because it's about how much money you have. But I'm not going to go into much. I'm going to allow her to give us all the information that we need to know. So let me start with introductions. My guest today is someone special called Lola, who is the CEO of a micro lending business. So Lola, over to you.
Okay. Good morning, everyone. Nice meeting everyone on this platform. Like she said, I run a micro lending institution.
Okay. So maybe we should start by your background so that everybody can have an idea of how you transitioned from being a banker to being a micro lender.
Okay, I have a bachelor's degree in accounting. Then I have a master's degree in finance. And then I'm a chartered accountant and chartered tax practitioner. Then I've worked in banking for about 10 years. I worked in commercial banking, retail banking, and investment banking as well. So it was all the experience I gained while I was gaining all that experience. It was when I started running my own business that I now realized that all the experiences I gained in all those places now helped with being able to run my business and being able to at least have experience in different aspects of the business. Yeah. So so my educational background and work experience all contributed to running the business. Thank you.
Great. So maybe we should start by explain to us what lending actually is? I have an idea, but for our guests, please explain to us what lending actually is.
Okay. So the business of lending is giving out funds to a borrower for a specified period of time at an interest rate with a specified date for or tenor for repayment. And then everything has to be in a loan contract. It can be paper, it can be digital. But there has to be an agreement between both parties, both the borrower and lender, on the terms of the agreement for it to be binding. Yes.
For it to be binding. Okay.
For
Okay.
Lagos,
And so,
if you're in Lagos State, where I'm
go on.
currently based, if you want to do lending business, you need to get government approval before you can become a lender. You can't just wake up one morning and say you want to become a lender. You need to get government approval to become a lender, to do the business of lending. So that's what lending is about.
So apart from getting an approval, what kind of experience should one have? If someone wanting to start this business wasn't into finance or didn't have the kind of background that you have, what would you advise the person to do?
Okay, I would advise them that whatever you want to do, whatever goal you desire in life, know what that goal is, read about it. There's no business that you can't start. You don't have to be a finance expert. And even if you don't have a particular skill, there's nothing saying that you cannot acquire that skill or look for somebody that has that skill and meet the person and learn about it. So find somebody that has the skill you don't have, and learn about it, or read about it and also read about it. So because you don't have credit experience or running a business experience, just know for that particular business, for let's say lending business, you will need to know about credit. You need to know about marketing. You'll need to know about social media in this generation we are in. All those things you need to know about basic accounting. But for things like basic accounting, legal, IT, even though you can employ someone with those skills, so you don't have to have special knowledge on those skills, but at least know about it, so that at least when the people you've employed, they are reporting to you, you are able to discern what they are saying, and they are not just talking over your head. So what you don't know, you can always acquire it.
Okay. So in your opinion, which skill is the most important? Which skill do you think should not be given to a staff or a partner?
Credit,
which one should?
If you want to be in lending, credit skill is the most, because that's what the business is about. Credit skill is the most important. When I was in banking, I had done credits in banking. So I did credit in banking for a few years. And then when I was in corporate banking as well, I did corporate lending, but for corporate institutions. So you need to know about credit, so that because your policies, all those things will be on it, and then you probably need to appraise credit from time to time to be able to discern whether a credit is good or not.
Okay. So how did you grow? How did you begin to acquire customers? Or maybe I should ask, how did you get your very first customer?
Okay, the very first customer that we got was via referral. So initially when we started, we started as an investment club that later now transformed into a micro lending institution. So we had brought in clients from the investment club. So initially when we started as an investment club, they were mainly family and friends. So when we started, it wasn't exactly on a clean slate. So we brought in family and friends from the old business. But after that, most of our clients, we get them via referrals and social media. Because right now we do loans mainly to salary earners working in structured organizations. A lot of them are on LinkedIn. So LinkedIn is our major source of clients currently.
Okay, so you reach out to them by cold calls, cold emails, just explaining what the business.
We run adverts, we run campaigns on all social media platforms, and there's always a button there for them to contact us. So we run campaigns, and the more campaigns you run, the more visible you'll be, and then the more your search engine optimization will be. So we run a lot of campaigns regularly so that people see it and then they contact us. Yeah. But the best option for us is referrals. Best one that works is referrals, because when you already have a credible client, so it's so good to maintain a relationship. If you don't maintain a relationship with the clients, then the clients won't refer other people to you. But one client can bring in 20. One upset client can take away 20 people that he brought. So relationship management is the key of it. So initially when I started, I wasn't an expert in relationship management. So I wasn't the one directly interfacing with clients. So like I said, a skill you don't have, you acquire it, you buy it. So somebody else that has better relationship management skills was actually responsible for that. Because if any wrong communication can drive away clients, and doesn't have to be in lending, it can be in any other business you're into. If you don't have good relationship management skills with all your stakeholders, whether clients, whether staff, whether regulators, you won't be able to sustain it long. So you have to be patient with a lot of people. You have to really be patient. So a lot of businesses currently that maybe they are unable to retain clients, because most of the clients that have been with us, some of them have been with us for 12 years. The
Wow.
reason why we've been able to retain them, like I said, relationship management is key. They bring in one client, can bring in several other clients once they are happy with you. And then, well, that's it. You can ask your next question.
Okay. Okay. So, but then I imagine that a lot of customers will come to you based on the campaigns that you do. So how do you sift out the good ones, the ones that are credit worthy?
Okay, there are two things that we look out for. So we collect their bank statements, we collect their credit history. Those ones are to know the amounts they can borrow and to be sure that they collect a salary. Then we collect identity documents from them in order to verify their identity and their place of work. So once we can verify your place of work, you have a stable income, and we can verify that you are able to repay. We'll start you up with a small amount, and then we'll build you up with time. So you can't come in unless you are referred. So if you are referred from somebody that has a high credit profile from us, and the person says, "Oh, I know this person," it's good enough for us. We'll start you not at the same level as that other person, but it might be close enough.
Okay. Okay. And in your opinion, um, what, how much of a customer's cash flow can you use to determine how much to lend to them? Is there a benchmark?
Yes, there is. So, in the recent era, because of high inflation, before current inflation rate that we are in right now, before we were doing 50%. So we will consider all the income you're currently earning, and then we'll consider all your loans and loans to other organizations as well. So if you still have 50%, so all your loans to other organizations and the amounts you are going to be paying us back monthly should not exceed 50%. But if you're an old customer, we vary it now because it might not be enough and people are having much more expenses. But it's usually not good to extend it beyond that. In traditional banking where I was coming from, it was 33%. But when you're a micro lender, you might need to bend that rule a bit to get more customers. Otherwise, at 33%, the commercial banks have already taken up most of that space. So you might need to increase it to 50%. But by the time you start doing 60%, you must really trust the customer a bit more, or discuss with the customer if they are having other side business. So maybe they have salary, but they now have a side business that they are doing by the side. So you know that 10% is coming from the side business. So even if the side business doesn't work or they don't get income from it, at least you're sure that your money will come from the salary. But the most important thing about lending, whether you're a commercial banking or micro banking, character. Either character of the customer is so important. If the customer, there are some people that they just don't want that stigma on their life that they are owing, or we are chasing them around, or they borrowed and they didn't repay. When you see such people, you recognize them. Even from your first conversations, they'll be asking you things like, let me not tell you what they'll be asking you, but they'll ask you some specific questions. Once they ask you those questions, you just be like, this person will pay back your loan. Because you can see they're already exhibiting caution. They're asking some specific questions. But customers that, you are talking to them about rates, your terms, and they're like, okay. Sometimes you need to be a bit more.
Okay. Okay. Based on what you're saying, let me ask you a question. Who are better borrowers, women or men, in your experience?
Initially, like I told you that people that are business owners tend to have a higher default rate than salary earners, because for business owners, their cash flows are never fixed. So sometimes it's not as if they are bad people, but the time they want to repay you back, somebody brings in goods for them. They will use that money to pay for their goods before they pay you back. And then the interest will keep on accumulating. And then that is where the problem comes in that, how much did I borrow? How much are you asking me to pay back? I beg. That's where default comes in. Because that cash there will always be a pressing need for it. But somebody that has a stable cash flow, they can plan, say, okay, on 20th, I'm getting paid this amount. I can remove 15K from it because I'm sure that another 20th money is coming to this account. So between men and women, in the olden days, I used to think women were better. But now, 50-50. There's no gender-based violence on it. Both of them are equally likely to default. And then I used to think about it like, okay, tribe, equally likely. So it's not a matter of whether your gender, it's not a matter of your tribe, it's a matter of your character and your ability to pay. It has nothing to do with whether you are beautiful or whether you are single. Initially, I used to even think that my initial theory was that married people, they would not default because of embarrassment to their married life, and that single people were more likely to default. But all those theories, when you get into the business of lending, it has nothing to do with it. It's the person, what is inside the person's character and the person's ability to repay back. It has nothing else to do with anything else. Anything else outside that is just being biased. So it's an open market to all customers.
Wow. Okay. Interesting. Because this insight is very different from what books tell us. You know, the general knowledge is that women are more likely to pay than men. You know, but this is new and very interesting. Okay.
What a man can do, a woman can do better is what I found out.
And you're a woman too, so you're unbiased.
What a man can do, a woman is equally better to do it. But the thing about women is, a woman would, unless something really drastic happens, a woman would look for all ways to repay. Unless she really doesn't have the avenue, she will look for all means to repay, typically, but that they can't default. There's no, so the only thing I can say regarding default rates is that an existing client is less likely to default than a new client. A new client, you have to observe them for a few months or even years before you can relax with them. But an old client is unlikely for them to default. It reduces over time because you've been building a relationship. So it's like a friend defaulting on you. So the business of lending is not just even paper or theory. It's a relationship thing. And I heard the MD of a bank once said that the only person he can lend a huge amount of money to is someone that he knows his bedroom and he can easily enter the guy's bedroom. When I heard that phrase that day, I laughed. I said, because it's a relationship thing. It's not, even if the person doesn't pay now. I've experienced it before. Somebody didn't pay for 8 years. She was in a rough patch for 8 years. In fact, the money was written off in all definitions of written off. And she called and said she's ready to pay back after 8 years. I was tempted to almost ask her that, please, did you go to a church and did you see our face in church? And they said, you must pay back the loan today. But she paid back. I was so impressed with her. She paid everything back in one go. So it's a relationship thing. Never give up on anybody. I never get tired of asking. It's like praying at times. Never get tired of asking. You don't know the day that it will happen. Just never give up.
Okay. And so why would a customer come to a micro lender as opposed to a traditional commercial bank?
A micro lender. So it depends on the amount you want to borrow. Most commercial banks, they don't really give out loans like that unless you have. I know that some commercial banks now they have packages on their phone where you can borrow, but it's tied to maybe your salary amount, and then with the button you can borrow. But there's just some. So I can't talk about micro lenders in particular, but I can talk about our organization in particular, which is that it's a relationship thing. Because most of our clients are even bankers. The people like, are they using Pankara on you in your office? And you check there, and then maybe in their banks, maybe they put limits, and then some of them reputation, private, like lending is a private thing. It's like going to see your doctor. You don't want anybody to know what your state of affairs is. If you borrow in a bank, then you see a credit report or you see an information somewhere that has your name there. So sometimes people are worried about their information just all out there in the display like that. So with us, you borrow privately, you pay privately. So there's no, and then as opposed to maybe you are in a bank and it has to go from one table to one table to one table. Everybody knows your life history that you want to buy a car. You can borrow privately. Only one person or two people know what you need the money for, and then to be paid back privately. Just the same way you want to go to a doctor. You don't want to go to a doctor that and the person that has your file downstairs is shouting on loudspeaker to another person that she's here for cancer treatment. So I guess everybody wants their privacy. You are probably going to get that privacy in a smaller place than in a larger place. So it depends on each person's preference. You can't serve the whole market. You have your own niche. Some people that just want something sophisticated, they can do it from their computer. They don't need to be coming to your office. Like our customers don't come to our office. They are all, like I said, they are some of them are bankers, so they want to do it by pressing a few keys on their computer and the money appearing in their account. They are happy with that. So
Well,
that's why.
okay. So, and in your opinion, do you think one can run this kind of business digitally, completely digitally? Because I'm thinking there's a high cost of setting up a business if you have to have a physical location. So does it help to have a physical location, or a digital or a virtual office works as well?
Okay. So initially when you start, you need a physical location because all your regulatory approvals, your registration with all your payment platforms, your banks, your PFAs, everybody's going to come and do address verification. So you need an address. So when you start off, you definitely need an address, physical space. And then there are some customers that would say, oh, they want to see the face of the people you are dealing with. So initially you need to have an office space. It might not be a large complex, but you need an office location that people can find you. And then, the world has gone digital now. You can have staff work from home. So not all your staff need to be physically present in that office location. So they can work from home. Your clients, they are dealing with you on digitally. Your stakeholders are dealing with you digitally. So you don't need to, all your staff don't need to physically report to an office, but an office space is required for all your registration. No bank will open an account with you without doing address verification, and you'll need an account for clients to pay money. No payment platform, credit bureau, nobody is going to deal with you if you don't have a physical address. So to start off, you need a physical address. You can't escape that.
Okay. You said something now about credit bureau, and it reminded me of something. Abroad, I imagine that it's easier to be in the micro lending business because there are credit bureaus, credit scores are very available. There's the client's history that helps you ascertain what kind of person he is. But in Nigeria, where data is limited, is our credit bureau developed enough to help micro lenders access a customer better?
There's the credit bureau is trying. There's room for improvement, so they're not there yet. Because abroad, especially in America, if you want to buy a car, you want to buy a phone, everybody will access your credit history and your credit scoring, especially if you want to buy it on credit. If you want to rent a house, you want to buy a house, everybody checks your credit score. But here, it's only limited to financial institutions. Your agents don't check you don't have any phone company checking your credit score here. So if you default, in order to get a place to buy, abroad, you need a good, very, very good credit score. Some neighborhoods won't even allow you to move in unless you have a very good credit score. So there's so much room for improvement. So not all loans are registered with credit bureaus. So but at least if somebody has defaulted, where it helps in Nigeria is if somebody has defaulted before, so with anybody in Nigeria, nobody will touch you with a long spoon. You will explain you will explain how you defaulted. Even after you cleared with that defaulting organization, and they give you a letter of non-indebtedness. In current institution, you are telling you to do like, whatever you did to that old institution, you can still do it to us. There's a Yoruba phrase, can they use bid in Jale? It's on top of the cupboard. So, for those that know about it, they usually will try to not want to have, at least don't have a bad name. So it won't have, we might not be able to access all the loans you have with everybody. For example, if a friend of mine should borrow me money, it won't be my credit profile. But at least with all the registered credit organizations, like my organization now, we all loans have to be um all loans have to be registered with credit bureaus. Otherwise, they won't allow you to obtain information. So for you to be able to obtain other credit information, you need to show evidence that you are supplying information to the pool and not that you are just taking. You two have to give information. So, and even if they feel that you're not giving enough information, sometimes they'll call you. How are you people doing it that? How are you running your business? So if they feel that you're not supplying all the information, they too would ask you for more. So that's basically it. But credit bureau, there's still room for improvement, but they've tried. Initially, when we started, we weren't registered with a credit bureau. And if we were, all the people that we gave loans to then that went bad would not have done it. But now, even if it's just a tiny amount that you defaulted on, nobody will touch you. And it helps lending institutions too. Because somebody that you think that has run away, the person will one day become a millionaire and then will want to go and get a loan with First Bank. First Bank will just say, go back to your lender, go and settle your loan with them. So by the time they go to 4 or 5 institutions and everybody tells them to come back to us, they'll usually will come and clear. So at that time, we'll now have our reconciliation meeting. There's no fighting there. So it's okay.
Okay, that's good. So, how do you manage cash flows? As in, you have multiple people borrowing at the same time, and their repayment cycle is different. So, how do you manage everything?
Yeah, it's a challenge of any financial institution matching inflows and outflows. Well, because of the we have like cash flow matches for even this month. Every day we know the kind of cash flow we are getting. We know the cash flow. And then we have a pool. We have a fund and a pool somewhere. We have a fund somewhere so that when we have cash flow needs, we get money from that pool and pay interest there. So, but between most times, there's a specific period of time where maybe a few days in a month where customers come and collect all the loans they want to collect and where they repay all the loans they want to repay. It's just a few days in a month. This happens every month. It's always happened like that. For those few 10 days in a month, all customers come and they get salary within that period and they repay back within that period. But there's another period. It can't is the challenging part is nobody is paying during that period, but people are collecting during that period. So it's only within that period that we need to arrange funding for. So whatever funding you arranged the previous month, you can safely assume that you are going to need that amount this month as well. So you have to provide for it at the beginning of the month. That once it's the first of the month, you have to provide for that money that is going to be needed till cash flow start coming again. So just sourcing for funding, it's not easy. And then because of the economy and inflation rate, customer demands are increasing. And because of that, we need more cash flow. But it's something we're working on, but we haven't finalized it yet. But we need more cash flows too. We need definitely more cash flows. So customers. And then initially, a lot of customers were disappearing abroad at an era when there was an era where a lot of people were relocating abroad. But now we have very few relocations. So customer demand is increasing. And then because of the inflation in Nigeria, this period, customer demand is just increasing during this period because the economy is tough. We all know the cost of things in the market. We expect everything is going up in price. So we expect customers to need more money. So we have the issue of funding them as well. So it's not easy. Commercial banks don't really give out loans like that to businesses, especially businesses that are into lending, because they think they compete business. But you'll be wondering, how is Prim and Tismon competing business? Well, they don't really like giving out loans to lending business. So you are more likely to get funding from private investors. So those are the people you will get money from. So I can understand why a lot of people don't go to commercial banks for loans, because it's not really so easy getting loans from them.
Okay. And based on your experience now, for SMEs, especially those ones that want to scale, and even professionals that need to buy stuff, but they don't have enough capital at the moment, but they're they're risk averse or hesitant to want to come and borrow money from an institution because of the fear of repayment and the ability to repay, or terms and conditions that they might not understand. How do you advise people like that? What do they need to know before they embark on borrowing money formally?
Okay, for SMEs, for whichever institution you approach, one, you have to find out whether it's a flexible institution, meaning that if you, for any reason, you're unable to repay, it's not as if the following day they will start chasing you around or harassing you up and down. So you have to find out what kind of institution is it. Is there somebody that's why I'm saying relationship management, customer service. Is there customer service that you can talk to? Because that's what is usually people's major fear, that you borrow money for a business and then the money doesn't come in as when planned. And then whenever you're borrowing money for business, you always have to have a plan B and plan C of a way of repaying the money. Because if interest keeps on accumulating on the money you borrowed, the interest might become much more than the amount you borrowed. So it's so important that when you want to borrow money, especially for a business you're starting off, don't use borrowed funds. Don't use borrowed funds. You can, if you use your savings, let the business grow, understand the cash flows, and then borrow money. Don't borrow money without understanding your cash flows, because you run into trouble. But if you understand your cash flows and you know that 20 million comes in every month, 20 million comes in from here to here, it's so easy for you to present your business plan to the bank. You have a cash flow statement you can present to the bank. You have an audited financial statement you can present to your bank and investors. Everybody can see it. It is clear, it is written. They would understand it. They will be able to relax and give you a good loan at a lower rate. You can get a high loan, an high interest loan to support a business, because at the end of the day, you have to calculate how much returns am I getting. If you're getting a 10% loan and your profit at the end of the day is 5%, it will be very hard for you to pay that 10% interest on the loan. So, first of all, you need to know their loan requirements. You need to know, are you able to get it? What stage of the business are you currently in? Have you grown enough? Can you shoulder the weight and the burden of a loan? If you can't, start up with savings, start up with family and friends. And I know that a lot of people are a bit hesitant to do family and friends because it leads to reputational risk. But your savings, you have to be a bit willing to put your skin in. Then start on a skill that your savings can start on, so that at least you can understand the business. There's a time like a guy came to our office. He's never sold 10 naira before. The guy wanted to borrow 1 million naira to go to China to go and buy goods. I said, when you get to China, are you turning right or are you turning left? When you come back, why are you selling these goods? Is it the Jumata or Lagos Island? You haven't sold 5 kobo before. You want to sell 1 million. The loan will go bad. You don't even have to be a prophet. It will go bad. So you need to know the business very well. You yourself know yourself very well. Understand your cash flows very well. Understand your cash flow needs. Before you even say you want to scale, make sure that the customers that you want to scale for, they are in existence. In fact, they are pushing you already. As in, you don't have a container for them. So your container is already busting. And then you are now approaching a bank for money. As opposed to you are by faith expecting your container to burst. Your container is not going to burst. So it's still at that level. Wait for them. Wait. But while you're waiting, you can be doing your investigations. Don't wait for there to be fire on the mountain before you start putting out the fire. Just for the time being, look around for the institution you can borrow money for, so that when you actually need it, and then there's no point in you borrowing money and the money is just sitting idle in your account, because you are going to be paying interest for each day that money is sitting in your account. Once you borrow the money, ensure that the person you are paying it almost immediately, and know when the money is coming back, so that you can calculate your interest. Interest in this country is high. It's about 28%, 30% if you are going to all those commercial banks. How much profit are you planning on making on the business? And you know you are still going to pay tax on all those business you are doing. You are going to pay tax, you are going to pay staff salaries, you are going to pay electricity, you are going to pay rent. So you have to compute it well. Can your business afford a loan? Not that you are getting cash flows. So you need cash flows. So what you need is an investor. What you probably need is an investor. So the investor doesn't have to be family or friends. There are some banks that they do non-interest lending. You can consider them. What they do is they partner with you. So they are like equity partners with you. So they share in both the risk and the liability and the rewards with you. You might consider that, but to now say you want to put yourself in a position that you don't have steady cash flows, you don't understand your business, even they won't take you seriously as well. And then you'll be disappointed. You'll be disappointed. And then once you're borrowing for a business, you need to show them if you have assets. Although people say, especially when you're borrowing larger sums, you probably need assets to secure those loans. Even as you're approaching the banks, be willing to show them that, okay, these assets, these assets, these assets. And the more serious they will take you is if the assets you are showing them, they are liquid. The more liquid the assets are, the more comfortable they will be with you. Because assets that are non-liquid, and I mean more liquid, I mean things like stocks, things like bonds, they can be easily turned to cash. You probably get more support than that, than giving them assets like cars and houses, because those ones are harder to sell. So in your waiting period before you approach the bank, it's a time when you should be building up your assets level, be building up on your cash flow, be building up on your capacity, building up on your skills, because your credit officer is going to ask you all those questions. When they're asking you all the questions and it seems you are knowledgeable in what you're talking about, they'll be more comfortable. But when they're asking you, where are you going to buy this thing from? You say from China. Where are you bringing it to? Which shop number? I don't know. Nobody will answer you. So your confidence in your business, your knowledge of your business, and you know that for any product you take to the bank, at least 50 people have taken that same product to the bank, and and the banks is arranged in sectors, in segments. When I was in bank, I was in hospitality sector. So we dealt with a lot of hotel owners. So because of that, you know what most hotel needs are. So by the time another new hotel person wants to start and you're asking them what are his needs, and he's not mentioning those things that you've been hearing every day, you'll be like, okay, you won't say that you don't understand your business in order not to explain to the person, but you will not consider the person a serious person. So whatever you're not taking any new thing under the sun to the, even if your credit officer maybe does not have enough knowledge, the relationship manager would know more. The branch manager would know more. The business division would know more because of their years of experience. So even if you convince one, are you able to convince all of them that you know exactly what you do or you understand your cash flows? But there's nothing to be, once you've arranged all your ducks in a row, feel free, walk confidently into a bank and say, I want to borrow money. Have all your documents ready. They will know that this person is serious. They ask for 3 years financial statements, bam. They ask for your projection, bam. They ask for your budget, 5-year projection plan. You give it to them. Before they even ask you for your ID card, you've given them to them. Not that you give them an ID. When you submit neat documents, it might seem silly, but when you submit well-arranged documents, well-thought-of documents, it increases your credit rating. But when they ask you for ID card, the ID card looks rumpled, it looks torn. When they ask you for check, the check looks as if it has stains of pepper soup on it. Even if, with all intent, they want to give you all this, you just look at all the documents. They don't even want to touch it. So how would you get to do? So you before you go, you have to build confidence in yourself. Have all your documents ready, and with prayer, anything is possible. But you yourself be ready. Let God build on what you have, not on nothing.
Okay. Thank you. So as we round up, what advice will you give to someone just about to start or is considering starting a micro-lending business?
What advice would I give to somebody that is about to start a micro-lending business is think about it. Any new thing you want to start in life, think about it. Pray about it. And be sure your reasons why you want to do it. So initially, when I was doing it, it might sound religious, but I don't understand the purpose of lending. And then while meditating on it one day, you are actually serving a purpose. You are helping people with their needs. So it's not as if you are just there for the business of making money, but you are actually fulfilling a need. Somebody is in a need. You're standing there in gap for the person so the person is able to repay. Once you see that you're providing service, you're helping somebody, it makes you see things better. So are you entering the lending space just to make money? Because you'll be disappointed because one bad loan can wipe away 10 months of 10 months of interest. It can wipe it away. But if you are there for the right purpose, you will not be moved. And then you have to check yourself. You need to be somebody that is honest and transparent. If you are not honest and transparent, you won't get investors. Everybody will be afraid of you and be wary of you. You need to be as transparent as white light so that people will know. People will be have confidence to give you money to lend out to people. So that even when you tell them that a loan went bad, they'll believe you that, okay, maybe a loan went bad and that's why these issues happen. And they know that investors will give you money. The next thing you are buying Lamborghini. By the time you go and meet them again, even if the Lamborghini is from another source, the next time you go and meet them again, they'll say, oh, you want to carry our money to go and buy Lamborghini again. So, but it's a rewarding business. Like I said, I don't see it as I don't look so much at it as a money making venture. I see it as you're helping people. You're helping people. Because until you get to an hospital one day, and then the hospital is asking for 500,000 naira deposit, and you're unable to raise it up at that time, but you have somebody that you can call, and you can say, you know what, I'm in the hospital right now, we need to give them 500,000 naira. So, and all the person is even able to write to you at the hospital is, I accept your terms and conditions, and the person gets the money, and they are able to use it for treatment, and the person leaves after. You will not know what you've done in the life of the person. The person might not even come back to say thank you, but heaven sees what you did. So it's more than just the business. You have to see it as a purpose, that you're serving a greater good. That way you will appreciate it more. But anybody that wants to start, yeah, they need to be aware of the risk. They need to be aware of the rewards. They need to be aware of the time hours involved. And they have to decide what kind of business they want to run. Is it going to be digital? So some people are into lending and they do it via apps where people can just enter an app and then they collect the money. Some people will prefer that you come into their office, you fill paper and forms and you collect your money. Some people like us will just prefer that you are not using an app. We are not coming to our office, so we are like an hybrid. Yeah. But you get your money. So in between. So everybody just, but you need to know about it. Whatever you want to learn, enter, whatever business you want to enter, you need to know more about it, know about the different aspects of it. Obviously, as you're there, you'll learn more and you'll gain more experience. But there's nothing like talking with somebody that already has experience in it. At least they'll tell you what they've gone through. I know a person that one time they had a logistics business. And somebody else wanted to start a logistics business, and the person went to meet the person and asked, oh, how is logistics business? And the person was open to the person and told them all the risks and pitfalls. And the person still went ahead and said, you know what, I know my capability and I can handle all the risks that are associated with it. So even if somebody tells you that, oh, these are all the high risk, all the pitfalls that are there, know ahead of time, mitigate for all those risks, and move on. Because if you keep on running away from risk, when are you going to achieve your goal?
Well, thank you so much, Lola. It's been a pleasure talking to you. And we are deeply appreciative of all the insight you've given regarding your business. So thank you and see you soon.
Okay. Thank you very much as well for inviting me.
Bye.